There's a $4 trillion time bomb sitting in the global financial system right now. And on August 5th, 2024, it partially detonated. The Nikkei crashed 12% in a single day, the worst since 1987. Circuit breakers tripped, trading halted. Within hours, the S&P dropped 3%. The Nasdaq entered correction territory. Bitcoin collapsed 15%. Investor anxiety hit levels not seen since the COVID crash. And all of this happened because a central bank you've probably never heard of raised interest rates by 0.15%. But that was just the fuse being lit. The bomb hasn't fully gone off yet, and your 401k is sitting right next to it. Let me tell you about the biggest trade you've never heard of. It's called the yen carry trade. And for the last 30 years, it's been one of the most profitable and most dangerous strategies in global finance. And here is how it works. Japan has had interest rates near zero, sometimes even negative, for 3 decades. Meanwhile, the US has had rates between 4 and 5%. So the trade is simple. Borrow money in Japan for almost nothing, then convert it to dollars and invest in US assets that pay 5% and pocket the difference. Free money, right? What could go wrong? Well, hedge funds didn't just buy safe treasury bonds. They bought tech stocks and crypto, anything with higher returns. And they did it with massive leverage. So, how big is this bomb? Conservative estimates say $1 to $2 trillion. But when you include all the derivatives, the leverage, the off-balance sheet positions, the total exposure could be as high as $4 trillion. That's $4 trillion of borrowed Japanese yen, converted to other currencies, sitting in assets all over the world. And here's the terrifying part. This isn't some hedge fund's problem. This isn't Wall Street's problem. This money is in the funds your 401k owns. It's in the ETFs in your retirement account. It's in the bonds backing your target date fund. You have been sitting on top of this bomb and you don't even know it. Because for 30 years, this bomb was stable. 2 things kept it from exploding. First, Japan kept interest rates at zero. Second, the yen stayed weak. As long as both conditions held, the carry trade printed money. Everyone was happy. But in 2024, something changed. The Bank of Japan started raising interest rates for the first time in 17 years. In July 2024, they raised to 0.25%. In January 2025, they raised to 0.50%. And in December 2025, they raised to 0.75%, the highest level since 1995. And they've signaled more hikes are coming. Analysts expect 1% by mid-2026. But that's not all. Japanese bond yields have exploded. The 10-year hit 2%, which is the highest since 2008. The 40-year bond just broke 4%, an all-time record. Here's why this matters. When Japanese interest rates rise, borrowing yen isn't free anymore. The math that made the carry trade work stops working. And when Japanese bonds start paying real returns, Japanese investors have a choice. Either keep their money in America, earning 4% with currency risk, or bring it home to Japan, earning 2% with zero risk. More and more are choosing to bring the money back to Japan, so the fuse is burning, and it's getting shorter every month. So what actually triggers the explosion? It's not one thing, it's a cascade. First, the yen strengthens. When Japan raises rates, or when investors get nervous, money flows back to Japan. This pushes the yen up. In August 2024, the yen strengthened 12% in just 3 weeks. That's a massive move for a major currency. So when the yen strengthens, every hedge fund running the carry trade is suddenly underwater. They borrowed yen when it was cheap. Now they have to pay it back when it's expensive. They're losing money on the currency and on their investments at the same time. So what do? They sell everything very fast. They dump their US stocks. They dump their bonds. They dump their crypto. They need dollars to convert back to yen to pay off their loans. And when enough funds do this at the same time, you get August 5th, 2024. Except August 2024 was just a partial detonation. The Bank of Japan actually backed off after that crash. They paused their rate hikes. They calmed the markets, but now they're hiking again, faster than before. The trigger is being pulled in slow motion. Now let's talk about what happens to your retirement when this bomb fully detonates. First, direct selling pressure on US stocks. When carry trade positions unwind, they don't sell selectively. They sell everything. The same funds that have been pumping money into the S&P 500 for decades suddenly become massive sellers. Your 401k holds S&P 500 index funds, so you will feel it directly. Second, Japan starts selling US treasuries. Japan is the largest foreign holder of US government debt. They own $1.2 trillion in treasuries. When they need yen, they sell. In April 2025, Japanese investors dumped $20 billion in US bonds in just 2 weeks. So when Japan sells treasuries, bond prices fall. When bond prices fall, yields rise. That means higher mortgage rates, higher car loan rates, higher credit card rates for everyone. Third, the contagion spreads. In August 2024, Bitcoin crashed 15%. Not because of anything crypto related, because leveraged funds needed to sell liquid assets to cover their yen positions. Your diversified portfolio isn't as diversified as you think. When the carry trade unwinds, correlations spike. Everything falls together. And here's what really keeps me up at night. We have no idea how leveraged this system really is. The carry trade happened through derivatives, through offshore vehicles, through shadow banking. Even the Bank for International Settlements admits they can't measure it accurately. We know it's at least $1 trillion. Some think it might be $4 trillion, but it could be even more. This is why it's called the black swan, a hidden risk building for decades that most people don't even know exists until it detonates. So what can you actually do? Look, I'm not here to tell you to sell everything and hide in a bunker. Markets recovered after August 2024. They'll probably recover again. But there are things you should know. First, watch the yen. This is your early warning system. When the yen strengthens sharply against the dollar, especially 5% or more in a short period, that's a signal that carry trade unwinding might be happening. Second, know your exposure. Look at your 401k. Look at your retirement funds. How much is in US stocks? How much is in international funds that hold Japanese assets? How much is in bonds that could be affected by rising treasury yields? You don't need to change anything, but you should know what you own. Third, have some liquidity. If a major unwind happens, there will be buying opportunities. The people who had cash in August 2024 were able to buy the dip. The people who were fully invested wrote it down and back up. Fourth, don't panic, but don't be asleep. The set it and forget it approach to retirement worked great when hidden risks like the carry trade were growing. So stay informed and pay attention. That's why you're watching this video. But now, let me leave you with this. Right now, there's a $4 trillion trade that's starting to reverse. It's controlled by a central bank most Americans can't name, using a strategy most investors have never heard of. And your retirement is caught in the middle of it. August 2024 was the preview. The bomb partially detonated and markets dropped across the globe in hours. But Japan backed off. They paused. But now they're hiking again. The fuse is burning again, shorter than before. I'm not saying it will explode tomorrow. I'm not saying it will explode at all. But I am saying you should know it's there because the people on Wall Street know. The hedge funds know. The central banks know. Now you know too. Were you aware of the carry trade before this video? Drop a comment. If you want to stay informed about risks like this that most people miss, hit subscribe. I break down complex financial topics every week. I'll see you in the next one.